All right, perfect. Yes, I want to approach the breakdown right here a little bit different than we did last week. And I want to slowly incorporate more things than just fair value gaps. For example, news, because news are very important for fair value gaps if you want to know when fair value gaps actually start to hold, etc. So that is what I want to do. And I believe also that the news, the economic calendar, tells you a lot about how the week actually will form, what you can expect, when you should trade. It's almost like a calendar. And what I mean by that, well, it is a calendar, but it's almost like it's set in your calendar when you should go to work, for example. All right, I should go to work on a Friday, and the economic calendar is telling me that. So it has no confusion, and that is what I'm trying to tell you. Now, if you do have any questions in the meantime, of course, or during the breakdown, etc., or afterwards, then feel free to let me know, and we can also go over them. Right here, what we are seeing is we have on Monday JPY news, US dollar news. Sorry, JPY news. Then on Tuesday, we have US dollar news that is orange folder news. So it is not something I am mostly interested in. It is, let me actually look, I'm looking at the wrong week right there. Excuse me. Still morning for me. All right, let me see. Right here, Monday, Australian dollar news. Then Tuesday, we have US dollar red folder news, which is tradable overall. The only thing is that on Wednesday, we have FOMC in the evening. So that automatically deletes Tuesday and Wednesday for my trading days. Then after we have on Thursday, we also have US dollar unemployment claims, which normally also is perfectly fine to trade. But then we have on Friday NFP, which is not something I would want to trade. Wrong again. This is the right week, right? This is the right week right here. All right, let me see. Then on Friday, we have NFP, and that automatically deletes as well then Thursday and Friday. So only after Friday, after the NFP release, is tradable for me. And that is mainly talking about the US dollar again. So that automatically tells me when I should be actually looking at the US dollar and when I should be looking at the crosses as well. So for fair value gaps to hold, I want to look at the crosses instead throughout the week and less so at the US dollar, because the US dollar was in consolidating conditions, seek and destroy conditions, which means it will likely continue to do that until NFP. But we have FOMC, so why not trade after FOMC? When we have two big three news events, so there's FOMC, CPI, and NFP, and they are next to each other. So again, we always have a 1 day boundary, right? Where ahead of NFP, the day ahead of NFP, you don't want to trade. And the day ahead of FOMC, you also don't want to trade. So there's a 1 day boundary. Then for NFP, since there is a 1 day boundary, then the volatility from FOMC will not be the trending conditions again. It will continue into NFP consolidating, and then NFP will be the real move happening. And it's the same if we have FOMC and then on Thursday, for example, CPI, or on Tuesday, CPI, and on Wednesday, FOMC. The real move happens after you have the last big three news event of the week. That is important to understand. So what does that look like on the dollar? Well, that basically leads to, again, consolidating conditions throughout the whole week until you have NFP right there. And NFP here was a little bit more difficult to trade. On indices, it was quite all right, but overall it was a little bit more difficult to trade because you did not have your classic retracement to then just continue higher, etc. Now, this is where a sweep versus a run on liquidity is definitely important to understand. And the reason that is because we have been sweeping those highs. And to tell that we are going out of consolidation, that we are getting out of consolidation, it is important to know how we are running liquidity instead of sweeping liquidity. And when I refer to a sweep on liquidity, I refer to something like this, where a sweep on liquidity, we have multiple signs. A sweep on liquidity, the first sign is that we are not closing below or above that swing high, swing low. Then the second sign is as well when we do close above it, for example, this swing high right here. We close above it, but the third candle is a rejection, meaning that we are still respecting that premium array. Now, a sweep on liquidity is, for example, this swing high right here. We are closing above it right there. That's already a great sign that we are running liquidity. Sorry, I didn't know. I'm not sure if I said sweep. That is a great sign that we are running liquidity right there, that we want to continue higher actually. And then the best sign you can get that we are actually running liquidity is when we have a fair value gap exactly overlapping with the high that we just took. So this is the highest high right there that is used as our draw on liquidity. And that is exactly what we can use as to know if we want to run the liquidity. Because if we close above this high, have a fair value gap exactly overlapping with that high, then this high becomes the fair value area as we know it. Where the fair value area is the 3 swing move right here. So we have a 1, then we consolidate right there. Overall, we are just offering fair value. We are just messing around a little bit with price action right there. Price retraces though, it does retrace into previous fair value areas right there, respects it, continues higher, meaning fair value was offered because otherwise we are not allowed to move higher right there. After that, we close above that high. So until we reach now the next draw on liquidity right there, we will respect the fair value area and we will deliver into the monthly fair value gap right there. And once we deliver into the monthly fair value gap, of course, it becomes a different story again. But the only thing that we really had right there at the end of the week was the end of the week was the most interesting part of the entire week, which is it comes back to sacrificing 1 week to have potentially high probability conditions the next coming weeks. And that is very important, that in this week, in a week like this, when you see it coming, it's not necessarily a week where I'm looking to actively get involved. I'm more so on the sidelines, just waiting. Yes, I can trade the crosses, but even the crosses, my expectations are lower. My expectations are always a bit higher for majors than for the crosses, purely because majors overall have a little bit nicer delivery. Crosses overall consolidate as well a little bit more than majors, etc. So right here, it is a week that I stay out to potentially get involved again the coming weeks after we have high probability conditions again. Now, if we zoom in a little bit right here on the 15-minute and on the 1 hour, then yesterday actually in the previous fair value gap session, we mentioned that we had this fair value gap right there. And if this was on a higher time frame, this formation right here, then we are sweeping that. That is not the greatest formation right there to actually run the liquidity. And again, when I say this is on the higher time frame, if this was on the higher time frame, we didn't have the 1 hour closing above it just yet, the 4 hour closing above it just yet. So we were looking at the 15-minute to potentially see and to potentially train our eyes right there to see a sweep versus a run on liquidity. And if this, for example, was on the 4 hour, I would expect this to be a sweep on liquidity instead of a run on liquidity. And the reason being for that is because the higher time frame here is more important than the 15-minute. The 15-minute can have a rejection above that premium rate and still continue higher off that 15-minute fair value right there. But it's about what is the 1 hour doing? What is the 4 hour doing right there compared to a daily swing high? A daily swing high, yes, of course, on the 1 hour, on the 1 minute, you will always have some kind of sweep, etc. So that is very important to understand as well. Where right there, afterwards, we are closing above the high pretty comfortably. We also already had the rejection, which we saw on the 15-minute, etc. So right there, it is quite nice to actually continue higher afterwards as well towards the monthly fair value. That is something we are going to go over next week. Then this news week also leads to different price action on ES, NASDAQ, etc. So what we are seeing right here is overall we had not the price action I expected, especially at the end of the week right there. Not necessarily something I expected right there. I had a difficult time reading the price action. But what we did see is we came into the weekly fair value gap right here to continue higher off of that towards all-time highs. So the weekly context was there. Then on the daily time frame, we saw that on the beginning of the week right there, we failed to create a new daily fair value gap higher, which of course is a great sign that we do want to reach for something lower, a lower discount array right there. We are not ready to immediately continue higher. Otherwise, it would have created a daily fair value gap. And then the choice would have been between the daily fair value gap and the weekly fair value gap. So it would have been a bit different right there. And on the 4 hour, eventually, we see that we are then respecting premium rates, respecting those 4 hour fair value gaps to continue lower off of them towards the weekly fair value gap. And after that, it all happens pretty quick. It all happens pretty quick where we don't really have a retracement until after we took those highs right there. First fair value gap right there to then continue higher off of that. Now, I want to look at this a little bit deeper as well, going into the lower time frames. On the 1 hour right here, we saw a price coming into the 4 hour fair value gap right there. And at first, we could have expected higher prices. At least that's also what we did. We expected higher prices at the beginning of the fair value gap session. Then afterwards, the confusion started to happen when we also created a 1 hour fair value gap lower right there. So now it's a battle, because it's a battle between the 4 hour fair value gap right there and the 1 hour fair value gap lower. So who's going to win? Either the premium or the discount array. How can we know which one is going to win? By playing the rejection, seeing which premium array is going to win by going into the lower time frame. So going into the 15 minute, the 5 minute, the 1 minute. Then if we go into the 15 minute right here, we can see that off of that 1 hour fair value gap that we have right there, we get a small rejection right there. On these candles, we have a wick that is stinging into it. And the next wick right there is first continuing lower, afterwards having a huge spike higher. That on the lower time frame, on the 1 minute, etc. Let me see. On the 1 minute, that looks like this, where that is just a simple rejection, where you only had the ST right there. Afterwards, we continue higher, creating a new fair value gap higher. And that's exactly what you would want to see when we do overtake fair value gaps, when we are overtaking PD rays. You get the rejection. After the rejection, you can look to get involved again. So here we get the first rejection. The battle is over after we create this new fair value gap higher right there on the 15 minutes. That is something you can trade off of. But afterwards, you can also wait for the new fair value gaps higher right there, PM session, to then look to continue higher off of overall the fair value area. You see this high is a little bit higher, so it should be this high right there. That is the fair value area overlapping with the fair value gaps as well. That is where price, if it wants to continue higher still, will respect to eventually continue higher. And that is also something that we discussed a little bit yesterday, where if we have a fair value area and we are quite close to it, the same on the dollar, then this fair value gap is not necessarily something I would want to trade off of. I would always prefer the fair value area. And the reason for that is because there is no reason for price to come back anymore when it comes into the fair value area as well. Basically saying there's two discount arrays right there. And these are the only two discount arrays that are inside the leg higher. After that, in the leg lower right here, there's nothing relevant anymore. There is nothing relevant anymore. If we do not respect those highs with the fair value gap, then we are taking liquidity right there, because we've already offered fair value, so there's no reason to come back anymore. Now, that means that this is the only area that can be left unmitigated as well. So if we were to continue higher off of the fair value gap right there, then the area here is left unmitigated, which leaves me a little bit uncomfortable, because then I think there is still a reason for price to come back right there towards the fair value area, which in an ideal world, I would want to see everything mitigated right there. So there's absolutely zero reason for price to come back, which allows us to have a lot more confidence when actually taking a trade right there to continue higher as well. So that is eventually what we see. Let me actually see. I did not see the 1 minute time frame just yet. Let's see what we do have there. We have the ST overall, which is already in itself a valid entry right there, the 1 minute ST. After that, we get a few Res. The difficult part about this is, again, price action is already quite high. So the stop loss becomes a little bit more difficult. Also something we touched on yesterday, actually, where, for example, if we were to enter off of this, then there is no real swing low here that you can cover, meaning the previous order flow lag is this one right here. Now, if you were to target then the 15-minute context high, that is a 0.33 RR. That is not really worth it in my book. Now, then you can either just stretch out the 1 to 2 right there and force the 1 to 2. That would also not hit take profit eventually. Also late, of course, during the week right there. So it's all things we need to take into consideration when we do want to take a trade. That the risk management here is quite important. So we also want to focus on the best entry. Now, right here, if you are looking at the 1 minute initially and you can't seem to find the best entry, as in that is not a great entry because of stop loss, it becomes quite difficult, etc. That story. Then what you can do is you can zoom out and find the fair value gap on the 5 minute, on the 15 minute potentially. And that way you are refining your entry, but you're also refining your stop loss automatically. So if we take a look at the 5 minutes right here, then the entry would become this, for example, where right now the stop loss would become this. And then a 1 to 2 is all of a sudden a little bit more achievable. So that is exactly what you do want to do. And that's the same for your 5 minute entries, your 15 minute entries, whatever it may be. If the entry itself becomes quite difficult and to manage through your stop loss, the stop loss is very wide, very big, then zoom out. And instead of just using the 1 minute fair value gap to enter on, you just look for a 5 minute fair value gap or a 15 minute fair value gap, of course, in context with one another, and then enter off of that. So that is eventually where ES also continued higher and where it can continue higher still towards the all-time highs as well. Now, if we take a look at NASDAQ, then we take a look at the daily again, and we start from scratch right here. Taking a look at the weekly as well, because we had a weekly fair value gap. And at the beginning of the week, we had a quite interesting price action, let's put it that way. Because we already moved away. We already moved higher right there. Instead of coming into the weekly fair value gap first, to then continue higher, very nicely, very structured. No, we already continued higher, actually. And when we continued higher right there, it was very important to note down the non-creation of this fair value gap, which again, the non-creation of the fair value gap happens when we trade into the first candle high, because when we trade into that first candle high, we are definitely not going to create a fair value gap right there, continuing higher. So when we are, again, same story as on ES, when we are not creating that daily fair value gap higher, then we don't have a choice. As in, there is no choice between the daily fair value gap or the weekly fair value gap anymore. It just becomes the weekly fair value gap that we can continue higher from. So it becomes a little bit easier to trade as well, where you don't necessarily have to wait for just the weekly fair value gap right there, because eventually we continue lower right there. And when we continue lower, going into the 1 hour, when we have this unusual context happening, we just need to find our usual context, which happens here on the 1 hour time frame. So at this moment, we were looking actually at price action in the live session, at the AM session, and AM session didn't do that much. The most of the move happened in PM session right there. Continuing lower off that 1 hour fair value gap, finding the usual context to continue lower from. Then this is where we can go into the 5 minute, into the 1 minute as well to find our entry, where the 5 minute we have the ST, which is already an entry in itself. The 1 minute, if you prefer the 1 minute ST plus RE, that of course can also be done right here, where this would be the entry. Depending on where you would have placed your stop loss, if you place your stop loss right there, would have been a bit tricky because you would have gotten tagged out. If you placed it right there, you would have been safe. So that really depends on the heat of the moment, what you decided as well in that moment, where you wanted to put your stop loss. But if you did place it right here, I would not blame you, as in this is not a bad stop loss placement right there as well. So if you got tagged out, it happens. Afterwards, we continue lower for a while. Then of course, volatility dies down after the power hour as well. And eventually we continue lower towards the weekly fair value gap, which we can continue higher from as well. And in a week like this, it is important to understand how the indices act. Where in a week like this, yes, you want to avoid most of the majors, but I do think when you do want to trade in a week like this, where you can't trade actively Tuesday, Wednesday, Thursday, and Friday only after NFP, the best approach would be to look at the indices and to trade them, because they automatically already have volatility, where Forex kill zones are, well, compared to equities open, compared to the 3 a.m. volatility that we have on DAX, etc., then Forex is just simply not volatile at all compared to indices. And that is where we really need news events. So for indices, you need less news events. As in, yes, you need news events overall to have more, even more clear price action, even better price action, knowing when we can expand higher, when we can expect a big move, etc. But equities open is already that volatile that even in seek and destroy conditions, you can get a trade most likely. And that is important to understand, where this week would still, again, would still be low probability for the indices, but a little bit higher probability than Forex. Or Forex, I would argue, is just a no-go. It's not something you would want to trade in this week. Afterwards, we wait for FOMC as well, where FOMC first has a move higher, and NFP just pushes higher off of that as well, which we are seeing right there. So the thing here is that we have a breaker right there. And the breaker I'm seeing is the two up candles, which leave behind a long wick. So there was a last move right there, higher to continue lower. There was this right there. And that wick, the high right there, is the breaker. And we also have the overlapping fair value gap, which we can come into. So that right there is where we can actually continue higher from. Now, why not off the standalone fair value gap itself? We never got the confirmation there. So then the next part is the overlapping defense right there, which is sitting right there. That is where we can continue higher from, where we can look for our entry pattern. So going into the 15-minute, into the 1 hour as well, it was quite interesting price action right here. And it was also a bit confusing right here. At least to me, it was confusing. Might have not been to you. Then right here on the 1 hour, we did not create a 1 hour fair value gap lower eventually, which is of course a great sign. On the 15-minute, we had a push higher right there. Now, once we had the push higher right here, we were close to the drawn liquidity, which is the highs. Then right there, at that moment in time, we saw a retracement into the 15-minute fair value gap and into 5-minute fair value gaps as well, sitting right there, which we failed to push higher from. So right there, with the volatility we had overall, we had essentially 3 volatility boosters, because we had NFP, we had equities open after that, and then we also had at 10 a.m. consumer sentiment right there. So there was a lot of volatility for the indices. And the volatility overall was not seen in the chart, very much less. So right here, when we did not continue higher right there, it was a little bit suspicious to me, as in, why are we not immediately continuing higher with this amount of volatility? It doesn't make a lot of sense to me. So I wanted to be a little bit more careful here, where after the fair value gap session, we came into the 15-minute fair value gap, continued higher off of that, and after that, it becomes quite clear. It becomes a little bit more clear than what we saw actually during the fair value gap session, where right now we have the fair value overall with the fair value gap as well, right there, exactly overlapping, which we can continue higher off as well. Next, we have another fair value gap, the order block right there overlapping as well, which we can again continue higher off of. The same story. So at the beginning, right here, it was again waiting for price. What does it exactly want to do? Where of course in hindsight, right here, it was quite obvious. But at that moment in time, it was not that obvious to me. And I was, there was a lot of contradicting things happening on different time frames as well. So I wanted to wait a little bit more. And then if we move on to YM, let's see on YM. YM, basically the same thing happening right there. I want to go over the higher time frame a little bit more here, where we also have the fair value area, which we are coming into again, right there, which is basically the all-time high. I know it looks very weird right here, but it's because of the contract that is not turned on right there. So this is not actually the all-time high on this particular chart, but it is on a different chart. So right here, the all-time high is of course as well a fair value area, where once we come into that fair value area, we can expect higher prices off of that. The first time, or the first moment we come into that all-time high, we sweep it. At least we sweep it with a first sign that we might want to sweep it, but we never get a bearish fair value gap, which is also, again, if we want to sweep it, then the second indication would be first the sweep, second indication fair value gap lower, which we never get. So right here, eventually we continue higher, create a new fair value gap off of that as well. Fair value area, fair value gap, not overlapping, as in not perfectly overlapping, but we can continue higher off that, eventually continue higher right there. target the new high sitting right there as well. Again, same story goes how you want to approach this week through news. Then looking at DAX. Now DAX is quite interesting, and the way I would like you to approach DAX, or the way at least I did it, I approached DAX in the past mainly, where it is following the other indices a lot, meaning whatever the other indices are doing, DAX is likely also doing. So if DAX is consolidating, then it's likely because the other indices are also consolidating. And if we have huge news events like NFP, like FOMC, things like that, then DAX is still affected by that. So that is it. You can treat it like the long lost brother of the other indices, where it's not family related, but it is related because it does the exact same thing over and over. So right here, what we saw actually, we saw the same characteristic where we are sweeping that high. Potentially, right? Because that's the first sign. If we are sweeping high, then we are not closing above it. We are respecting the premium rate. Next would be that we are creating bearish fair gaps right there. All right, we never get the bearish fair gaps in hindsight right here. Then the next thing where we can actually continue higher from is the fair value gap that we have right there, the daily value gap. It's the first discount array that we encounter. So if we want to continue higher, retracing back into the daily value gap to then continue higher off of that, that could be quite nice overall. And looking at this in hindsight, of course, on the daily, it's quite nice price action, quite nice. So how do you try to capitalize on this? Well, that is where, if you are using a flow trading plan, and that would be my advice, I would not necessarily look at this from a filtering process trading plan. But if we are looking at a flow trading plan, then you are looking at the 3 a.m. to 5 a.m. right there, the time frame. Then on the 15 minute, on the 1 hour, you want to see, do we have 15 minute fair value gaps, a 1 hour fair value gaps to continue lower from eventually right here. But the most important part, I do not necessarily think this is the highest probability price to trade, because we never have a daily fair value gap supporting the idea of going bearish. But we do have a daily fair value gap supporting the idea of being bullish. So right here, this, once we get this price action, this is definitely a lot higher probability, where eventually, once we come into the breaker with the overlapping fair value gap, in itself, these are already trades right there. And I probably think that you would have hit a 1 to 2 before we actually retrace back towards a little bit deeper to then continue higher off of that the next day or later that day as well. And after that, we see on Friday, let's actually see what we do see. We just continue and continue higher. So if 3 a.m. has a nice retracement right there to continue higher off of that, then that's of course ideal, where eventually it is a bit messy right here. And then right there with NFP open, we continue higher right there. And well, we continue higher, say that, but we have a bigger retracement right there as well, which is not the nicest price action overall at the end of Friday. But the higher time frame direction was quite clear, where it was a sort of a ping pong action. And that is mainly your concern when you are trading a flow trading plan, where you trade towards the daily value gap, trade off the daily value gap, find your higher time frame PD rates, and you constantly trade towards them and off of them. That's the most important part. All right, then if we take a look at Australian dollar, US dollar. Now, this is where the economic calendar is again very, very important. Where at the beginning of the week right here, we already came into the weekly fair value gap right there. And when we came into the weekly fair value gap, of course, we have a beautiful context. This is beautiful context right here where we can continue lower from. The only thing that did not agree was time. So that is when you will see sweep of those highs right there to then continue lower off of that, where we also have a beautiful move into a 4-hour fair value gap. But since time is not agreeing right there, there's not a trade I would want to take. So once we have this trade right there, eventually we target the context lows. And when we reach those context lows, we then have a huge sweep of the highs again, and then we continue lower. And this is typical what you will see in a week like this, where the price action, price itself is nice. Time is just not agreeing with price. So you'll see some messing around, sweeping of the highs and lows to then have the real move. And the important thing here to understand is as well that this is a trade, of course. Yes, in hindsight, it's a beautiful trade. But we can also see what happened before and what happened after. And that could have also happened at that moment in time. So be very careful and be very mindful of that. Just because price is nice doesn't mean it will deliver in that manner. We also need time agreeing for that. Let's see. On Euro US dollar right here, delete this one. And the thing here is, again, the same situation over and over. It's just exact same thing that happened on the dollar, where this was the week for most of the Forex majors, where it was just consolidating, and then NFP had the real move. Where you can see the indices were just different. The indices are just different during this week. And that is important to understand, because if you become sort of a hybrid trader, where you have experienced a flow trading plan, you've also experienced a filtering process trading plan, and you can see best of both worlds, then in a week like this, you can allow yourself to potentially switch to a flow trading plan to next week get back into the filtering process trading plan. Of course, that requires experience, requires a little bit more time than just 6 months of trading both. It requires quite a lot to be able to pull that off. So that's also very important. But right here, for Forex majors, this is just not a great week to trade overall. Now, for flow trading plan, I could understand right here that this might be nice because you're trading in seek in short conditions. So the 15-minute, etc., will guide you to where price action wants to go overall. But a filtering process trading plan, it's a week to stay out. And the thing is as well, with a filtering process trading plan, it is not very likely that you are going to get a setup after NFP. Where flow trading plan, yes, you might get that. But for filtering process, not likely, because filtering process trading plan just requires a bit more time for a setup actually to form. So that's also important, because then this is basically a week to skip and you would only focus on the crosses as well. Where again, we have the same story, seek and destroy until we arrive at NFP, and then we get the real move lower right there, which I do believe we can continue lower from as well. Then on GU right here, we have the same exact story where, well, this has been the same exact story for a couple of weeks right here, because we've been consolidating over and over and over on GU. But I do think this can now be the real move to actually continue lower finally. And for all these other Forex pairs, it's the same exact story, because it is just the way the economic calendar is formed. And you can see how Forex is so reliant on that economic calendar, and the economic calendar will essentially just simply tell you what the week wants to do as well, which is of course a really valuable skill on its own. So eventually US dollar CHF continues higher, where the beginning of the week is just messy price action. There's nothing to be said about that. It's just very messy price action and nothing really interesting. We're also on the 1 hour. If we do get a 1 hour ST plus a 1 hour rewrite there, it's not something I'm willing to take. Why not? Because we have NFP the next day. So I want to wait for that NFP to then continue higher, because the ST is a lot less trustworthy when it did not happen during a significant news event as well, like NFP. Yes, FOMC, but then it leads me back to the story where when we have FOMC and NFP in the same week, then you want to wait for the last big 3 news event, because that is where the real move happens. US dollar, Canadian dollar is the same exact thing, consolidating, where eventually we just continue higher right there. So based on price action right here, actually, I would argue that it was very nice price action to potentially continue lower. So if we did not take into account time, then you're just going to get burned in these weeks. US dollar JPY, where eventually we come into the overlapping part right there with the OR block, which we can continue higher off of as well right there, which we already saw coming quite early actually, around here I would argue, where we did not respect the first line of defense. So we did mention, all right, if we want to continue higher, then we are likely going to come into the overlapping defense to continue higher off of that. The only thing is right here that it had messy price action. You would have waited for a couple of weeks to then have ugly price action right here again, once we come into the order block, and to then just skyrocket higher. And that is also these weeks where the lead up to this week is not that nice. And afterwards, you don't even get the chance, most likely, to get involved, which of course is also a part of trading. Then if we move on to silver, now silver, Also not the cleanest price action, very ugly price action actually right here. Also really reliant overall on news events, and that's exactly what we're seeing here as well. Flow trading plan would have been a bit different, but filtering process trading plan would have just not been nice. Well, what we can see is that we are coming into the daily Verwijt gap, sitting right there. Let me mark that out properly. Sitting right there. And the only thing the next day right here can do is expand higher. After rejection like this, the only thing the next candle can do is continue higher and also be an up candle. At least an up candle, seeing how we reject right there. Because the context should be reached. So right here, you not wait for a new daily Verwijt gap. No, this is exactly where you can go into the 4 hour to find your new context. So once we have that 4 hour Verwijt gap right there as well, the only thing I'm expecting right there is a retracement into the 4 hour Verwijt gap to continue higher off of that. And once we see this price action right here, and we fail to continue higher slowly and slowly and slowly, and then we reach these lows, indicating that this now is a mitigated gap, that this right here is has already offered fair value. So if it's not offering fair value and is not willing to continue higher off that with a huge move like that as well, I believe when did we look at this? I believe we looked at it a little bit earlier before we took out the lows yesterday. But then the target becomes this low, the previous mitigated gap right there. Because simply said, this should have already continued higher right there. That is the same thing that happened on gold right here, where we also had the 4 hour Verwijt gap, did not continue higher off that. So the target then becomes this low right there. So for a flow trading plan, you can play around with that. You can see, all right, where do we want to trade towards? Do we want to actually continue higher, continue lower? Because you get more clarity on the 15-minute, meaning you just have more price action to work with. And again, when it does become clear eventually, then you might not even be able to catch the move like this, where it just drops lower and you're not even able to catch a proper move right there, which is a bit of a shame, but that is trading. Then on Bitcoin, also quite interesting price action. And right here we had the daily ST higher, which was very clean breaker as well, which we can continue higher, of course. The breaker being a little bit higher than the Verwijt gap right there, meaning that this could definitely be a breakaway gap. We might not want to trade into that before we already continue higher. News and the way news affects Bitcoin right here is in the same manner. The only thing is that it's not as Forex pairs, it's not as indices, it's in between, where it's not something I would want to trade during a week like this, but it is definitely being affected overall by news events. So if you're willing to take a higher time frame trade, this could be nice because there's more volatility overall in the week itself. And when I say it's in the middle of indices and Forex, it's a little bit more random. And it's not necessarily exactly perfect like Forex, not necessarily exactly already volatile like indices. It's a bit in the middle right here. It's a different asset class, and that's also something we need to take into account. Now, the thing here though on Bitcoin is that at the beginning of the week, we were looking to create a new daily Verwijt gap higher. And once we do not do that right there, on the next day, we failed to create a daily Verwijt gap higher. That is sort of when all my interest in this instrument is just gone. I am not interested in this anymore, and I would want to wait for more clear price action. Yes, we can go into the 4 hour to get a clearer picture, etc. But the 4 hour here is not necessarily something I would then want to trade off of. I would more so want to wait here to get, again, a clear picture on what we actually want to do. Because we failed to create a daily Verwijt gap, and that's suspicious. If we were to deliver towards these highs right there, then we create a nice ST. Great sign, nothing wrong with that. That's absolutely perfect. We come off the breaker, we try to create a new daily Verwijt gap higher. Absolutely perfect. Then, in the high probability conditions, we should have just simply said, create a new daily Verwijt gap higher again. And when we then not do that, that becomes suspicious. That becomes the exact opposite of what you would want to see in high probability conditions. So during the live sessions and during forecasts, what you see me do a lot is I say things that sometimes do not happen, but I say things in advance, meaning if I want to trade ES, then I want to expect this to happen. if I want to trade Bitcoin, then I want to see this to happen. And when that doesn't happen, that's a great sign for me to understand that there is potentially low probability conditions, and we can't ignore that as well. So whenever you set that boundary, you set that image for yourself in your head of what you're expecting of price action. That's great, because when you then stick to that and that actually plays out, then you know you are trading high probability conditions. And when that doesn't play out, then you know, all right, or I'm wrong, or there's some kind of low probability conditions. Either way, in both scenarios, there's not something I actively want to look to trade. I want to look to trade when I'm actually getting the thing that I want, when my analyst phase has been achieved right there. That is the most important part. Then if we move on to crude oil, where crude oil is, it's interesting price action, let's put it that way, because we come into the monthly value gap right there. We don't really get the confirmation, but we get a really nice rejection right there, where we understand the next candle can already continue lower, which is just the next monthly candle. So the next monthly candle continuing lower towards that context low, that's beautiful, because then you have so much context to actually work with that you can actually look to trade. So here on the weekly, nothing much going on besides the fact, of course, that we have a weekly value gap that we're not following through on, that is not being created, which is quite nice. Other than that, the daily and the 4 hour right here is quite interesting. Also a little bit of a shame, because the move happens here without really getting a chance to get involved. And if we look at this a little bit closer, we have this daily value gap right there. And the daily value gap is the first area of resistance actually. So coming out of that monthly value gap, the first discount array that we encounter right there. First, we have nothing on the weekly, right? So on the weekly, there is no discount array. All right, what's on the daily? On the daily, there's a daily value gap. So that right there is the first area of resistance. When we are slowly transitioning from bullish price action right there to bearish price action, of course, there needs to be some kind of negotiation first, where it does not happen where we just do continue higher, then all of a sudden continue lower. I would then argue again that the continuation lower is just purely manipulation. Where if we want to have a shift of order flow, there truly needs to be a negotiation, there truly needs to be a shift. Meaning that discount arrays will have a sign of respect, but slowly start to fail, but still have a rejection right there. Then premium arrays will be created, and those premium arrays will slowly start to then hold right there while still having rejections of discount arrays. Then after the negotiation is done, premium arrays will be in control. And when those premium arrays are in control, we have no resistance anymore to the left right there, which then creates no resistance runs right there, which happens very, very fast. So at the top of price action, at the top of a reversal area, a potential reversal area, that's when you see those negotiations happen. When there's the transition from bullish order flow to bearish order flow, the flow is slowly transitioning. So here, the first resistance area is very important to understand. Why? Because that would then prevent you from taking a trade on the 4 hour right there, trading into a lot of momentum. And a lot of momentum is coming off the daily value gap right there. Where here we are creating premium arrays, they are having a lot of momentum pushing into them, where eventually we create new premium arrays. Same thing happens right there. And then eventually we continue lower, where right now the fast price action happens. And where right now, if we trade into a premium array in the form of fair value gaps, that is exactly when we can continue lower from that as well. Let me see on Nifty. If we move on to Nifty. Then on Nifty right here, I expected lower prices at the beginning of the week into the monthly fair value gap that we had right there. Would have been very nice to see. Overall, we got the exact opposite right there. And we got a daily value gap higher actually, which we also continued higher from currently. So overall as well, the price action here is not necessarily something I was super interested in, because my expectation again was wrong. So my expectation of continuing lower off the daily value was already wrong. So when that is already wrong, then I do not want to really look into that as well anymore. Then moving on to the breakdown list right there. All right, Australian dollar, New Zealand dollar. Let's actually see. Sometimes I forget what I even forecasted right there. Then on the weekly, we swept those highs by the look of it. On the daily right there, what do we actually have? This is where initially I expected higher prices actually. So not lower prices right there. Where initially we could have expected higher prices of the daily Fairvalue gap to continue higher off that. Only thing is that we do not create a daily Fairvalue gap higher right there. So again, the non-creation of the daily Fairvalue gap higher, that creates the domino effect, which I believe there was also a question in the Discord about that recently, about the domino effect. Where the domino effect here is that if that daily Fairvalue gap right there is not getting created, all right, we might just see a daily Fairvalue gap not being created. But what I see right there is that right now, then we are not offering fair value. So there's no reason to continue higher anymore. This right here is then the liquidity right there. After that, we have this mitigated gap. We also coming off of a breaker. So all those discount rates have had a rejection, which are basically mitigated right now. So all those are weak, where a next target becomes, for example, this fair value gap, and afterwards the target becomes these lows. So then domino effect starts to happen, where this weekly high right there is not a run anymore. It's a sweep of liquidity right there to continue lower towards those lows. So that is the domino effect, where eventually we continue lower. Did not want to be a part of this move as well, with, if I remember correctly right here, news at the end of the week right there was not really supporting the idea of taking a trade. In general, overall, we didn't really have super nice Australian dollar and New Zealand dollar news, only on Tuesday right there, which would make Tuesday and Wednesday tradable. For the rest, not really interesting. Then if we move on to Euro New Zealand dollar. Now this was where we came into the weekly Fairvalue gap. We had a rejection of the weekly order block into the weekly Fairvalue gap right there. For me, I believe I was waiting for a daily Fairvalue gap either higher or lower right there, because we're still in that resistance area where we're coming off of premium to then into discount, consolidating, because we are in that resistance area. So here it was simply a matter of waiting to see whatever it wants to do right there. And we didn't really get anything. And this is what I mean with crosses overall are more prone to consolidation, where if this price action would have happened on the majors, for example, of course it's easy to say, but similar price action, then you would have had likely less consolidation overall, because it's just more volatile. Then if we move to GBP Australian dollar, let's see. Right here, we came into the weekly fair value gap right there. And this is actually something I was very interested in trading, but I did not get the chance to get involved. Then on the weekly fair value gap, we can just simply look to continue higher towards that high right there, which is the context high. And I went into the 4 hour and into the 1 hour overall to look for a potential trade ID. At the beginning of the week right there, we didn't really get the nice signs. After that, we got a beautiful fair value gap higher right there. After that, we continued higher, but we did not really get any clean setup anymore, in my opinion, where I did not get the chance to properly get involved, where the context ID, the overall analyst phase was perfectly fine, was checked off. The execution phase was not really present, was not really there. So didn't manage to get a chance to get involved right there. And that's also, for example, crude oil, where the analyst phase is also quite interesting, quite easy to understand, simple to understand, let's put it that way. And the execution phase becomes a little bit harder sometimes. So delivered nicely, just no trade. GBP New Zealand dollar, same situation, where I was also expecting higher prices of the weekly fair value gap. Also something I was actively looking to trade. Previous week highs, of course, as well as target, as well as that swing high right there. And on the 4 hour right here, we just didn't really manage to create fair value gaps early on. Then after, only on Friday, we created fair value gaps right there. But on Friday, it was already on my breakdown list, where I was not interested in trading it anymore. Then if that is a very small fair value gap, no, it's not a very small fair value gap. It's not a fair value gap right there. So eventually there's just nothing interesting right here, and just left waiting for it to do something until Friday, where potentially next week this can be interesting if we want to follow through towards the highs as well. Then Australian dollar, Canadian dollar. Let's see. Now this is quite simple actually, because we are coming into that weekly Verwijl gap right there. Or sorry, that's not a weekly Verwijl gap, monthly Verwijl gap. We are coming into that monthly Verwijl gap, which we can continue higher from, which can also just get a rejection to then continue lower, right? So how do we view that? Well, on the weekly, we do not have a weekly premium rate just yet. At the moment, we came into the monthly Verwijl gap actually. And then if we go into the daily, the same case as crude oil, we had a daily Verwijl gap right there to continue lower from. So the area here, this whole area is a consolidation area. It's extremely low probability here to trade. Extremely low probability. Even for a flow trading plan, I would argue that that is extremely low probability to trade. So what do you wait for? You wait for either a daily Verwijl gap higher or a daily Verwijl gap lower. And once you get that daily Verwijl gap, that indicates that the rejection is done and the price is willing to either move higher or move lower. And in the meantime, you don't do anything. So right here, what we saw is we had the daily Verwijl gap right there eventually created. We didn't have news supporting the ID. At least not news that I was like, all right, I'm confident enough to actually take that trade right there, because we had Canadian dollar news on Thursday, which was already quite early during the day. So it's not something I would want to trade on Friday. Then Australian dollar news was also not present. So right there was no news that I was interested in. So I just missed the overall move right there, which I am more than happy with. Then on Euro CHF, let's see. Euro CHF. What were we doing? Monthly, really not that clear. Then on the weekly right here as well, not super clear, but we are coming into those lows right there that we can continue lower from. Order block. So a nice rejection of the previous week, which can just follow through. We don't create a weekly Verwijl gap higher. That is overall quite nice and interesting price action to continue lower from. The only thing here on Euro CHF, that at the beginning of the week, I actually demanded for myself for price to create a daily Verwijl gap lower right there. And that would be the easiest way to actually trade off of that, because if we get a 4-hour Verwijl gap lower, we can trade that, but if it's not in context of the daily, it's already a little bit lower probability. So the highest probability thing to happen right here is a daily Verwijl gap lower to continue lower off of that. Now, once we do not create that, then yes, we can drop into the 4-hour. And the reason I did not want to take a trade anymore was simply because we never create the daily Verwijl gap. So my first thing that I demanded of price never got met, which is, of course, you might say, all right, I am wrong and I just need to go into the 4-hour, but I think you just need to stay out, because there's a reason why your high probability conditions did not get met, and you can't ignore that reason. Where right here, the 4-hour never delivered lower as well. So it was just an indication that we were getting into low probability conditions, into a consolidation right there. Then if we move on to Euro GBP. Now, this is actually something I personally would never trade. And I added it to the list because overall the drawn liquidity in the form of the monthly right there was quite clear. But we never had clear context on the weekly or the daily. 4-hour, yes. But 4-hour context alone is not something I am looking to trade off of. If we have monthly, weekly, very clear, and we have nothing on the daily, but we do have something on the 4-hour, all right, I might consider trading off of it. But only a monthly low right there that we have. And after on the weekly, we have nothing. On the daily, we have nothing right there. On the 4-hour, we have nothing. Then this, in my opinion, can never be high probability, which is also why I never got involved right there. And it just ended up being consolidation as well. And the important thing that I'm trying to tell you right there is, again, that just based on the 4-hour, it's not something I would want to take. I want a little bit more context than just the 4-hour. All right, let me see some questions right here, Dux. Yeah, Dux was very difficult. Same as last week, I would argue. On live, it was hard, you know where it wants, but how Dux sometimes deliver is sad though. It is. It's especially in a news week. It's a reoccurring thing where in a news week, and DAX in general, right? DAX doesn't even need to have a news week like this to pull that off. But where price action is quite nice, you know where it's heading, you just can't seem to get involved. And there's nothing wrong with that, as in, if you force your way into the market right there, then it's also going to be extremely low probability. So also be careful of that you don't force your way into the market where all the stars sort of need to align. We first have analyst phase, then we have execution phase. They both need to be nice in order for us to get involved. So that's important. Let me see. Or can we add Indian crude oil in forecast? Well, we can potentially look at it here and there. Although add it into the forecast right there. It's quite a specific pair right there, but we can take a look at it really quick right here. Let's see. On the monthly, just continuing higher, actually reached all-time highs. All right. Let's see, reached all-time highs. Then on the weekly, what are we doing? Continuing higher. Daily, just continuing higher. We had an ST actually continuing lower. Oh, we didn't reach the high yet. Okay. Then on the 4 hour, all right, not too crazy price action. I like this actually more than Nifty. I will look into it. Crude oil MCX. MCX right here. Aha, okay. Let's see, monthly fair value gap that got traded into. That is quite interesting. Right there, weekly. Sweep of the lows. Daily. Okay. I'll think of it, my man. I'll think of it. Let me see. What does LRLR mean? It is a low resistance liquidity run. So basically saying that it moves fast, and with the low resistance means no resistance. So the story we had right there on crude oil, right here, the transition from bullish to bearish order flow is the transition from bullish order flow, bullish discount arrays, basically holding still. So still giving a rejection. After that, we don't have rejections anymore, which makes it low resistance because we have no discount arrays anymore sitting right there. The resistance part is that those discount arrays, if that makes sense. Let me see. Basically no premium. Yeah, exactly. The meme, the sticker. Oi. Let me see. GBP JPY looks okay. No, let me see. I didn't add it to the interest list for myself, and let me see why I didn't do that. I didn't do that because we were sweeping that high right there, and on the weekly we could continue higher off of that. Overall, didn't really like the price action, and the reason why I didn't add it is because we only had 1 day to trade it. So that was Thursday, and when price narrows down to 1 exact day to trade, I just would rather, same as Forex for this week, I would just rather sacrifice the whole week to wait for potentially next week for some clear price action. So right here, we can see that we come into the weekly value gap and we actually try to push higher, but we never have time agreeing. So it tries to push higher, but the volatility is simply not there. Time is not agreeing. So then Thursday makes the low of the week actually, which is explainable because we have GBP news on Thursday right there. And that was the only real tradable day, in my opinion. Then Friday right there is where we can continue higher. But more importantly, if we have news next week, let's actually see. Well, that's not the best week for GBP JPY again. So if we had some nice news next week, then we could have looked at some nice price action right there to continue higher off of that as well. That makes sense. Let me see. In a 50%, in a 50-50 bullish bearish situation, how important would it be to have a low resistance liquidity run on one side and a high resistance liquidity run on the other side? Well, I would argue quite important. And the reason for that is because it's just another confluence, right? Where if we have, for example, crude oil right here. Crude oil at that moment in time is quite 50-50 right there. And when it's quite 50-50, if it wants to continue higher, it has a monthly fair value gap going against it, which is quite the big premium rate. It's the biggest premium rate you can have going against it. So I would argue that is the more high resistance than the lower resistance is continuing lower right there. So when we then get the right move, we get the confirmation to actually continue lower, then that indicates in 50-50 situation that you can more so execute on that. Where in 50-50 situation, if we have bullish price action supporting the ID, even if this daily VWAP gap right there follow through, create a new 4-hour VWAP gap higher right there, which it actually did, is not something I would want to trade because we never overtook the monthly VWAP gap. So it's another confluence, another boundary for you to actually look, all right, which side is more high probability where I will not get taken out before I actually take a trade. That makes sense. The sticker is too good, bro. Yeah, it's a funny sticker. Derek. No, it's a good sticker. Can you look some stock no matter what? Yes, I was actually looking at some stocks yesterday, which I don't know. I like trading stocks. Let's look at Tesla as well. I was looking at Meta actually. Let's look at Meta. I was looking at Meta, and because Meta had a huge move higher, and I am actually looking to get back into stock trading myself as well a little bit. I started off all the way with stock trading, which was just basically, well, I called it investing. I just put some money into it and I hoped for the best. But if we take a look at Meta right here, let me see what the yearly chart actually is doing. Yearly chart just sweeping those lows, not respecting that for value gap. We have a huge move low right there. Afterwards, we are creating an ST right there, potentially indicating that we are sweeping. And after, the interesting part here is that we are coming into a monthly value gap right there to continue higher off of. I'm also looking at the overall broad price action because when I do want to trade stocks, it's also not going to be intraday trading. It's more so going to be look at the monthly, seeing what the monthly is doing. All right, what can the next year do? What can the next years potentially do? So here, again, of course, hindsight 2020 vision, but I think we can all say that the draw on liquidity was quite obvious. So even if you entered off the monthly right there with just overall being a little bit more loose with your stop loss, not like in not like in Forex, etc. It's a little bit different approach. At least that's how I would go about it. Then right there, entering off the monthly value gap alone is a very nice trade to catch that that last bit of percentage right there. So that is 35% that we actually continue higher off of. So that's quite nice. And on the weekly, let's see, we have weekly value gaps right there, continuing higher, weekly value gaps. It's just overall beautiful price action to actually continue higher. Now, the more difficult part here about stocks is when we dive into the lower time frame, because then it gets quite confusing. And the amount of gaps you have because you have the New York Stock Exchange open, etc., that you have to deal with, then it becomes a little bit more difficult to deal with. Those gaps, you can see them as just fair value gaps. So not actually gaps like this, but just fair value gaps. You can treat them like that. But the way I would approach this is if I were to go into the 1 hour to 4 hour, it would only be for entry purposes. Other than that, I would just look at the daily, weekly, etc. This might actually be something I will add into a forecast list or something like that, because I really enjoy investing in stocks. It's a nice hobby. Can we have a series on stock trading, like stock trading enrollment? Yes, for sure. And I was actually looking to do that in the fall, because usually fall is where stocks start to rise, and then in May they fall down, etc. It's just a stereotype, but in fall you have a lot of money coming into the stock market. But this is definitely very interesting. Even Tesla right here overall had really nice price action. Weekly value gap right there did not continue higher off of that. So we create a very small value gap, which we can continue higher off of. But then we disrespect it fully by this candle. Then the domino effect starts, where this becomes a target. And after that, we have no other discount rate. So this becomes a target right there, continuing lower as well. So finding our usual context on the daily, right here, daily value gap, even the 4 hour. And the way I would approach stock trading here, I would be a lot more loose. Meaning I'm not expecting for a perfect fair value gap to be traded into. No, if I already see the unusual context, perfect. Let me just short something right there to then continue lower off of that. So that is how I would go about it. You can even use options, whatever you want to do. But this is very interesting. Definitely something I am looking into more again. I really enjoy that. All right. If there are any questions, then please feel free to let me know. Other than that, this will also be the breakdown for the actual breakdown, the recent breakdowns. And next to that, I will also upload the forecast. Then the next fair value gap session is on Tuesday again. Tuesday 8:30 a.m. New York local time. Let me see before I end it if there are any questions. Thoughts on the dollar for next week? Monday tradable, or would you rather wait for potential overlapping fair value gap? Let me see. Let me give you a sneak peek of the forecast. Let me see. Based on this close right here on the monthly, I would argue that we are going to target, again, by the way, it's not a close on the monthly, but it's a close on the weekly that already tells us a little bit that we are comfortable with being above that previous month's high right there. So currently, I would argue the next premium rate is that monthly fair value gap, which is definitely something I am looking to target. I already have in my mind that we might deliver into that before we even get a significant move. So I'm also comfortable with that. That makes sense. Then next to that, on Monday we have US dollar PMI. Then Tuesday we have some orange folder news. Wednesday some orange folder. Those are FOMC members speaking. So be aware of that, as in that is still some volatility since it has to do with FOMC. Next to that, we have Thursday, unemployment claims. All right, overall, not too bad week. Just the FOMC members, be a little bit wary of that as well. Then right here, if we go into the weekly, nothing really interesting. Daily right here, daily fair value gap is going to be too late, I believe, before we actually deliver into the monthly fair value gap right there. So when a daily fair value gap gets created, I believe we have already been delivering into the monthly fair value gap, which I believe can happen on Monday. Especially Fed Chair Powell speaking on Sunday, actually, right there. I believe the market is already open by that time. So this is when we can expect either a huge gap or a lot of volatility at the beginning of the week. Then on the 4 hour, if we can retrace towards the overlapping part, could be nice. The only thing is, I would want this to be a very short retracement and aggressive spike higher, because I'm expecting Monday to just sort of take off towards that monthly fair value gap. And if it wants to create a high right there, then we can definitely have nice price action the rest of the week as well, where we can continue lower, create a nice ST, continue lower as well. It's important to understand, again, the resistance that we are running into right there. Same as crude oil, if that makes sense. All right, then that will be it for me. Everyone have a great weekend. Don't forget to rest, of course, very important to take a good rest as well in the weekend, and then I'll see everyone at the next one. Perfect.